I want to get right to the reaction in the oil markets. Brian Sullivan is in Miami, where he spoke to some of the biggest names in the energy market at the Goldman Sachs Energy Conference. John Kilduff, founding partner of Again Capital and CNBC contributor, is also with us. We will start with you, Brian. What are you hearing?
What we're hearing is that the market is still oversupplied. I think if you're expecting terrible, Andrew, and you only get bad, I guess you could read that as good news, which is why oil spiked last night and then has kind of reversed course. The reality is that there is still a lot of oil out there, and this response, many are considering it measured. I think a couple of things to watch, and we'll see if John would agree with this. Number one, what will be the American response, if any? If any oil supply targets are targeted, then you can expect a move in oil prices. Remember, this was not that. Number two, will there be any closure of the Strait of Hormuz or tanker companies refusing to operate there? 20% of oil and about 25% of liquefied natural gas goes through there every day. And I think the one thing, guys, that not enough people are talking about with regard to this is the domestic response in Iraq. Remember, this is already a country that is politically fractured. In fact, an oil facility was shut down briefly last week because of protests outside. Iraq's at 4.6 million barrels a day. They're the second largest OPEC producer. They want to get to 6 million barrels of oil a day. If they can't get their internal politics in order, it's going to be very difficult to do that. I think that watch for any domestic disturbance inside of Iraq. If you get that on a meaningful level, perhaps led by Iran, trying to shake the tree, Joe, if you will, then you can see oil prices spike higher.
Hey, John, I want you to comment on that idea and the larger question about instability longer term in the Middle East, and whether, for example, if the U.S. gets pushed out of Iraq or gets pushed out of any other of the Middle Eastern countries that are seen as our proxy right now.
Well, we're hearing in the market that they're pulling out of Kuwait. Our soldiers are pulling out of Kuwait. That was just announced a little while ago. This is far from over in terms of the region. The asymmetric stuff is what likely comes next. And there's certainly a lot of worry, as Brian just noted, about transiting through the Strait of Hormuz. How realistic an attack there is or isn't is an open question. I think it's a low probability. But you know what? It's scary enough right now that some of the big tanker companies have said that they are going to avoid going and transiting through the strait. That's enough to potentially curtail some oil supplies, particularly out of Iraq, where really the bulk of that 4.6 million barrels flows from their southern Basra port facility. So that's the big thing. And again, we're hearing about potential hacks of the Kuwait news agency, likely by Iran. Again, this is a speculation morning, so that's the best we can do as far as pointing fingers. But look, the smoke cleared. Thank God none of our soldiers apparently weren't killed. And also, the oil continues to flow. So therefore, as long as the oil continues to flow, the security risk premium in prices is going to remain tempered.
Right. John, and I hate to ask you about prices when we're talking about lives, but when you look at WTI right now and just sort of gaming out, I hate to say that too, but gaming out what may or may not happen in the Middle East based on what you just said, you look at WTI, it is where in a month from now?
Actually, the chart is suggesting that it'll go considerably lower. This is a technical failure of the first order in 2 straight sessions where we spiked to new highs on the current move and have fallen back. If we get a negative day today, if prices end up actually going negative, then that will invite technical selling in a big way. But the overhang, and now we're going into a slack demand period, it's downward pressure short of, again, oil facilities getting hit.
Hey, quick final word to Brian.
Yeah, I mean, let's not forget, in this market, guys, you got the U.S., which is about 12.8 million barrels. They could, if oil prices go up, we might see production rise in the United States. That's what we talked about at the conference yesterday. Brazil, they're increasing their production. And our good friend Norway, they have a new field in the North Sea already producing 350,000 barrels a day. That's expected to go up. The point is this: the risk-free oil in the world seems to be growing, while the risk-on oil in the world seems to be under threat. But unless global demand, guys, goes up, you're going to see a lot more oil out there.